2025 is shaping to be a huge year for growth stocks, but not all of them are created equal. A lot of names are still burning cash, chasing hype, or stuck in the maybe one day category. But two companies are breaking out of that mold. They're not only growing fast, they're actually making money, expanding globally, and building moats around their business. In this video, I'm going to show you why I like them and why they are worth adding to your portfolio in 2025. Let's go. Hi, my name is Gautam, and on this channel, I talk about the stock market and achieving financial freedom with the power of options trading. So if you enjoy content that can help you retire early and achieve financial freedom, don't forget to hit that like button, subscribe to my channel, and share this video with your friends and family. Also, if you are new to the options world or are simply looking for one-on-one guidance to help you shortcut years of trial and error and avoid costly mistakes, click on the coaching link below and I'll be honored to help you out. With that said, let's jump in and get started. My first pick is ticker symbol DASH, DoorDash. DoorDash reported its Q2 earnings earlier this month, so let's check it out. DoorDash achieved GAAP income of $285 million, a substantial turnaround from a loss of $157 million in Q2 2024. Its earnings per share came out at 65 cents, beating analyst consensus of 44 cents. Revenue jumped 25% year over year to $3.3 billion, surpassing analyst expectations of $3.16 billion. Total orders increased 20% year over year to 761 million. If we look at the marketplace gross order value, it rose 23% year over year to 24.2 billion. Adjusted EBITDA reached 655 million, a 52% increase from Q2 2024. So as you can see, the Q2 financials look really solid in comparison to the previous year. And if we check out the factors that contributed to the strong performance, they're as follows. Growth in memberships. DashPass and Volt Plus membership programs fueled an increase in order frequency and retention. Operational efficiencies. Improved logistics efficiency and lower Dasher costs contributed to the higher net revenue margin. International orders continued strong growth, outpacing the US marketplace, according to DoorDash Investor Relations. DoorDash's investments in expanding beyond restaurant delivery into new categories are also yielding positive results. Looking at their outlook for Q3 2025, DoorDash anticipates marketplace GOV in the range of 24.2 billion to 24.7 billion. Adjusted EBITDA is expected between 680 million to 780 million. Now, keep in mind, adjusted EBITDA for Q2, which was just reported, was 655 million. So going from 655 million to anywhere from 680 to 780 million for Q3 reflects continued momentum and future growth. Obviously, following the positive earnings report, DoorDash's stock saw a significant increase, gaining about 8% on the day of the announcement. Looking at its 5-year chart, as you can see, all the way from 2023 to 2025, it's upward trending, which is fantastic because I'm an option seller and I like to sell put options on stocks. So I like to choose a stock that has strong fundamentals. And if I sell put options on it, I like for the stock to rise over the longer period of time. So for example, if I sell put options on DoorDash while it's here, and let's say it falls down here, then as you can see, over the longer period of time, it still rises up. So that means if I'm assigned shares and it's a great stock, then it will rise up eventually and I will profit from the stock price appreciation. So again, looking at the 5-year chart, it shows all of those trades. And if you look at the 1-year chart, the 1-year chart is looking pretty solid. Looking at its PE ratio, it's about 136, and 136 is obviously higher compared to the average S&P PE of around 26. But again, it's very normal for growth companies to have high PE ratios, so I'm okay with that. Looking at its comparison on the year-to-date returns, you can see that DoorDash is up 47% compared to the S&P 500, which is up 10%. And on a 1-year basis, DoorDash is up 91% versus a 16% increase in the S&P 500. Looking at additional stats, we see the earnings per share. It did have a miss here in Q4 2024, but since then, Q1 2025, it beat analyst expectations by about 6 cents. And then again in Q2 2025, it beat analyst expectations by 22 cents. If we look at the earnings, the blue pillars have been rising steadily, so I certainly like that. And looking at analyst recommendations, we have about 40 analysts covering the stock. And as you can see, out of the 40, we have 21 giving it a buy and then a 6 giving it a strong buy. So about 26 of the 40 are giving it a buy and a strong buy. And I obviously like that. Looking at 1 year price targets, it's currently trading around 246, with the average analyst price target being 289. And we saw that it made a 52-week high earlier of 278. So given that it's around 245, we still have a lot of room towards the upside. Now, looking at a 6-month chart, this is where it reported earnings on August the 6th. As you can see, the stock jumped up all the way to 278.15, making a 52-week high. And since then, it has pulled back along with the rest of the market over the past few days and is currently trading slightly above the 50-day moving average. Now, I'm recording this Friday, August 22nd, and Jerome Powell spoke earlier in the day and gave an indication that we could possibly see rate cuts in September. And with that, DoorDash, along with the rest of the market, is up 1%. So keeping that in mind and noting that it's literally on the 50-day moving average line right here, the next level of support I see is the bottom of the Bollinger Band, which is the $237 level. Now, given that it's trading around 247, the $237 level would be about a $10 discount from the current level. Or if you want to go even safer, I like the bottom of this wick right here, which is around the 233, 234 level. As you can see, if I expand the chart right here, there's a lot of support right here, all the way from June through August. We have a solid line of support right here. So I like this 233, 234 level. So let's pull up the options chain and see what kind of premium we can collect. I can simply go out 35 days to the September 26th options chain. So looking at the 235 strike price, it's actually offering a premium of $5.25, which one options contract represents 100 shares. If you times that by 100, that would be about $525. That's how much you can collect by selling one put on the 235 strike price. And the return on your investment is about 2.4% if you go with that strike price. So not bad at all. And going with the 235 strike price gives you about a $12 discount from the current price of the stock if you're assigned. And if you're not assigned, you still end up collecting a pretty decent premium on a great company. My next pick is Shopify, ticker symbol SHOP. And looking at Shopify's Q2 earnings that were reported earlier this month, Shopify's revenue surged 31% year over year to $2.68 billion, exceeding analyst expectations of about $2.5 billion. This marks an acceleration in revenue growth compared to previous periods. Looking at earnings per share, non-GAAP earnings per share reached 35 cents, beating analyst consensus of 29 cents by a significant margin. If we look at gross merchandise volume, which gross merchandise volume is a key indicator of the total sales processed through Shopify's platform, that increased 30% year over year to 87 billion, surpassing the consensus of 81 billion. If we look at free cash flow, Shopify maintained a robust 16% free cash flow margin, marking its 8th consecutive quarter with double-digit free cash flow margins. Again, that is fantastic and shows a company that is financially healthy. Looking at some of its segmental performance, the Merchant Solutions segment, which includes Shopify payments and currency conversion fees, saw revenues increase 36% year over year to $2 billion and accounted for about 75% of Shopify's total income. Subscription Solutions jumped 16% to $656 million, and this growth was driven by a higher percentage of subscriptions from higher priced plans, increased platform fees, and the extension of trial period. So the subscriptions represented about 24% of the revenue for Shopify. Beyond the strong financials, Shopify continues to expand internationally and reported a 42% year-over-year international GMV growth. The company's growth outpaced local e-commerce markets in Europe by about 4 to 5 times, meaning that European customers prefer Shopify to other platforms by a pretty significant margin. What I also like is that Shopify secured major enterprise clients like Starbucks, Canada Goose, and Burton Snowboards in Q2. With that, Shopify continues to invest in AI-powered tools and platform capabilities to enhance merchant efficiency and attract a wider range of businesses. Looking at Shopify's 5-year chart, again, as you can see, all the way from 2023 to 2025, we have a nice looking upward chart and up 38%. And looking at its 1-year chart, it's up 90%. And obviously, right here earlier in the month on August 6th, it made a 52-week high. Coming down to additional stats, it has a PE ratio of 78, which is again normal for a growth company to have a higher PE ratio. And looking at its comparison to the S&P 500 on a year-to-date basis, Shopify is up 32% versus a 15% return on the S&P. And then on a one-year basis, Shopify is up 90% compared to 23% with the S&P 500. Coming down to earnings per share, they had a slight miss in Q1 of 2025, but as we just went over the Q2 financials, it beat earnings per share by about 6 cents. Revenue looks pretty solid and the net income has been rising as well. Looking at analyst recommendations, we have about 52 analysts covering Shopify in August. And of the 52, greater than about 50% have a buy and a strong buy. So again, that looks pretty solid. And looking at where it's currently trading, it's around 141.65 right now with an average analyst price target of 161, showing that there's definitely room towards the upside. Now, looking at Shopify's 6-month chart, this is the jump right after earnings on August the 6th, making a 52-week high of 156.85. And again, just like DoorDash and the rest of the market, it has been coming down over the past few days and currently sits right on the middle Bollinger Band right here. And as you can see, we have this green bar here today. Again, we had Jerome Powell speaking and the whole market's up. Shopify is actually up 4%, which is fantastic. So again, looked like a very good support level for Shopify. But I do notice that we have a gap fill opportunity. And generally, anytime you see big gaps on a chart, the gaps do tend to get filled over a period of time. So even while this is looking solid, if I were to sell puts on Shopify, I'd basically look at this gap fill opportunity right here. And we have a lot of support. And this is the $129, $130 level. So that's what I would like to target, given that it's currently trading around 142. And it would give me about a $12 discount from the current price point. Let's pull up the options chain and see what kind of premium we can collect. I'm going to go out to the September 26 options chain and looking at the 130 strike price, that's a delta of 21, so fairly decent. And for that, we would collect, if I click on the 130 strike price right here, you would collect about $2.25 in premium, which again, since one options contract represents 100 shares, that would give you about $224. And if assigned, then you would get assignment at the 130 strike price, giving you a nice $12 discount from the current price point. If you don't get assigned, going with that options contract would give you a return of about 1.77%. And if you want to be slightly more aggressive, I would actually choose this 131 strike price, which is a slightly higher delta of 23, but again, gives you a good discount from the current price point. And the return on your capital is closer to 2%. So I suggest going with the 131 strike price and then capturing close to a 2% return. Again, if you don't get assigned, then you're collecting 2% on your investment. If you do get assigned, you're getting your shares at a great price point and at a good discount from the current price level. So that's it for today's video. If you enjoyed it or learned anything useful, don't forget to hit that like button, subscribe to my channel, and comment down below with your thoughts or questions. If you would like one-on-one coaching directly with me, click on the first link in the description below, and I'd love to help you out.